think it's 11 on the dot.
You're right.
Yeah, maybe we can kickstart things.
Yes, and good morning, everyone. Good morning for joining us on this rather auspicious conversation about COVID and its responses, financial responses or financial management responses. We are grateful today to have our own senior fellow, Dr. Tia Champon, to deliver this particular webinar. I've known Dr. Tia Champon for eons, I think since 2009, and I've no doubt at all his intellectual capacity when it comes to delivering on a broad array of subjects, economics, energy, economics, and all the ancillary, should I call it, subjects that are related to these rather two important subjects. I must say that he has graciously decided to have this webinar as part of his fellowship with Imani, but otherwise he's a very busy person. He indeed is a very busy person, and we are very grateful to him for accepting to do this for us. As you all know, this is going to be, I think the budget is going to be read somewhere this week or probably next week. But otherwise, his presentation goes beyond, his solutions or his ideas are not just for Ghana, but also for most African countries that are struggling to relieve their economies as a result of COVID. Indeed, it has been said that the IMF in its June 20 update estimated that the 2020 economic activity in Sub-Saharan Africa was going to contract by some 3.2 percentage points, which obviously reflects a weaker external environment and measures to contain the COVID. As we all know, Ghana itself had revised its rather not ambitious, but expected 7.2% GDP to almost 2%. In fact, the IMF suggests that that is likely to be depressed further. And I'm sure our colleagues, friends on the IMF may want to make a point on that when the Q&A starts. But you see, we also know that the several governments have decided to institute certain, what I call corona alleviation programs. And the Ministry of Finance in Ghana had written to some of us asking for ideas. I recall that earlier in the course of the year, Dr. Champon and Patrick Stevenson of Imani co-authored a paper suggesting that we should not squander all the gains we've made for short-termist thinking and short-term measures. And they proposed a number of relief items that the country could also look up to. But I'm also aware that the government is looking for ideas beyond just the shores of Ghana. I am reliably informed that the president, for instance, and in fact, I know this for a fact, that has been asking for advice on the Barrenhouse Foundation, Greg Mills's Barrenhouse Foundation, and they have been in contact and we've had some conversations on that. However, the implementation of fiscal policies to respond to COVID-19 will definitely be through public financial management systems, and primarily, as Dr. Tia Champon has suggested, through the budget cycle. So this webinar is going to look at the ability of PFM systems to meet COVID-19 challenges in Africa, namely supporting fiscal objectives, finding offsetting savings or increased COVID-19 related spending, and the preparation of delivery of stimulus packages as well. As I said, the presenter today had co-authored a paper much earlier advising on what should be done. But I must also admit that this morning I did see two publications in the dailies. One from the Director General of what used to be the State Enterprises Commission, admonishing state entities that they should be careful, they should tighten their fiscal belts. In fact, he lamented the fact that an estimated 1.2 billion CD dividends that state-owned enterprises were supposed to return is currently in peril, and he's most likely going to get maybe less than half of that. So it tells you what we are dealing with. So with these words, I'd expect that our speaker, Dr. Tia Champon today, will think about providing answers to the following three general questions. whether he thinks the PFM systems in Sub-Saharan Africa have been able to meet COVID-19 challenges, namely supporting fiscal objectives and the preparation and delivery of fiscal stimulus packages, among others. Second, whether with several African countries already revising their budgets, how does it think the fiscal policy objectives can be maintained in the mid-year budgets? And finally, how do we better target the spending to deliver value for money and avoid profligate spending, especially given the prospect of elections in some African countries, which obviously typically exposes our fiscal pressures? So as I said earlier, Dr. Chia Champon is an economist par excellence. He's also a political risk analyst with knowledge and experience working with governments and international institutions on strategic advisory, regulatory, and commercial issues in oil and gas, energy, mining, and public finance. He's been an advisor on for several governments. He's also a non-resident senior fellow at Imani, but he also appears and he's been quoted severally on international media such as the BBC, Bloomberg, AFP, CNBC, and is published in leading academic journals. In fact, as I speak, he's currently co-editing the Palgrave Macmillan book project titled Petroleum Resource Management in Africa, Lessons from Ghana. I would think that with these introductions, I'll hand over to Dr. Chia Champon to begin his presentation. We are grateful to have you once again. I must admit, and I must say that the participants are drawn from various sectors, academia, business, and government, and we have our friends on the IMF as well. So over to you, Doc.
Okay, thank you very much, Franklin, and I appreciate those warm introductory remarks. Good morning to everyone, and thank you for joining us this morning on this very interesting subject. I'd just like to share a few thoughts on the above subject of how public financial management systems can respond to, if not the single biggest challenge that faces humanity today, perhaps next to climate change. So I would extend my gratitude to you, Franklin, once again. I thank the wider Imani team for facilitating the webinar and the dialogue, and for the participants that have joined us. I intend to spend about 35 minutes to go through a few of the points that I've raised, and then we would have an interactive Q&A session. So in terms of what I intend to kind of like broadly cover today, I've kind of categorized it under 4 broad themes. I recognize that some of the words here are heavy, so I'll try as much as possible to maybe break some of them down. So when we talk of public financial management system, what does that actually mean? You know, what does fiscal policy mean? What does that, or what is the relationship between that and like, you know, medium-term budgeting? And then a few of how the governments have responded so far to the twin crisis of COVID, but also the commodities price, you know, fall that we have seen in a number of the countries that are commodity or resource dependent. So let me quickly start off my conversation with a bit of a snapshot of where we are globally today on COVID. As at when I put this data up just about 2 days ago, we were a little shy of 13 million cases worldwide, of which under 600,000 people, unfortunately, have died with all the lost potential productivity that has gone waste as a result. But if you see on the map here, you can see that some regions have been impacted on the health front, perhaps a bit more severely than others. So Africa relatively has had cases in the 100 to just around the 10,000, 20,000 range on average. There are some countries that actually have, recorded close to about 100 or 2,000 cases upwards. And as a result of the crisis that we have witnessed, we are also seeing a corollary impact on a lot of these economies in across the globe, but particularly in Sub-Saharan Africa as well. So the ongoing pandemic has actually triggered quite a bit of a big response from across the board. And I just mentioned that we live in a time, like no other. And if you look at several of the forecasts that have been put out, and here I just took the forecast from the IMF's World Economic Outlook in April of last year, you could actually see, quite a significant drop in economic activity measured by global GDP. And if you look at a lot of the equity market indices, likewise, they have also fallen. Now, there's question marks still on what we're expecting in terms of the recovery, whether it will be a V-shaped, a quick downturn and an uptick, or a U-shaped, or even these days I hear things about a square root uh, um, recovery on the horizon. So with the cases and fatalities rising, a lot of policymakers have been forced to spend to mitigate the impact of the crisis. If you look at the latest numbers, as much as $11 trillion worldwide has been pumped into mitigating the effect of the crisis across the globe. And this trajectory is nonetheless no different from what we're seeing in Sub-Saharan Africa. In fact, a lot of the Sub-Saharan African economies are forecasted to witness quite significant or sharp contractions, more so than other economies globally, partly because, in the last commodities super cycle or boom that we had, from about 2000 to 2014 when the oil price came down, there was a lot of revenues that inflowed into a lot of these African countries, but the diversification efforts has been quite weak. So sometimes all it takes is just one extra or exogenous shock to these economies for us to undo a couple of years of gains that have been made. So as you can see on the chart on your left-hand side, this was what the IMF and some other multilateral bodies were forecasting in terms of outlook back in October of last year. And you can see a number of the countries were actually in the green or are green colored, doing between 3 to 6% GDP growth for 2020 and beyond. But the environment has changed, and the change in the environment is what you see on the right-hand chart here, where suddenly we actually are looking at far less in terms of the growth forecast for these sub-Saharan African economies. So we are looking around about 3.2 or just around 3% contraction in GDP growth for Sub-Saharan Africa for 2020. But the shape of the recovery going into 21, 22, it's all dependent on also what happens, at the global level in terms of whether we're expecting a V or a U-shaped or even a square root recovery. I think that we're actually going to bottom out a little bit more. So the recovery is likely to be a bit more of a U-shaped. So we have to while away a little bit more of time, as we especially are expecting in some economies or in some places a second wave of infections in the absence of a vaccine being found to deal with the virus. So the response to the crisis so far globally has been through two main channels. On the fiscal side, which is the tax side of things, we've seen a number of countries adopt things like reducing VAT, reducing corporate income tax, trying to control non-priority expenditure or redirect expenditure into like healthcare spending. We've seen some targeted social infrastructure spending, tax holidays to SMEs, all of that on the fiscal side. And this is across the board globally, but also in Sub-Saharan Africa. And I'll give you a couple of examples in the next few slides. And then on the monetary macro financial aspect of things, we have seen a number of the central banks reacting to reduce the policy rate and also lower or reduce some of the primary reserve requirements for the commercial banks, all in a bid towards creating more liquidity in the system. On the macro financial aspect, some of the central banks in Sub-Saharan Africa, like the Ghanaian Central Bank, has even had a swap or FX repo arrangement with the U.S. Fed that allows them to access up to about $1 billion of forex USD coming in to prop up the local currency. So that has been the response to this crisis overall across the board in a number of the countries. However, the scale, I'll just skip one more slide. However, what we have seen is that despite these interventions, i.e. the fiscal and then the macro side, a lot of the countries on the continent have or are facing significant funding gaps. And therefore, they've had to resort to some of the traditional multilateral lenders in addition to trying to renegotiate some of the debt repayments to create a bit more fiscal space. So what you see on this chart here is the number of countries across the world that have approached the IMF for various credit support instruments. What is interesting in this chart here that you could see quite a lot of the countries that have approached the fund are actually in Sub-Saharan Africa. At the last count, I think about 29 or 30 of the 52 African countries, so just a little over half of the African countries have approached the IMF for one form of funding or the other, and things like the rapid credit facility, rapid financing instrument, and then a few other funding protocols as well. And part of the reason is because of the demand shocks that have been caused by the pandemic, and due to the demand shock, and also on the external kind of supply side, FX earnings from commodity exports have reduced. We've seen remittances also declining, tourism, all of that have all combined to create a much more onerous or difficult financing environment for a number of these Sub-Saharan African countries. And I just mentioned a few minutes ago that could you please mute, if the moderator could mute others, because there's a bit of a background noise.
Yes, please. Could you all mute your microphones so that I don't have to do that myself? Thank you.
Yeah, so I mentioned a few slides ago that part of the reason why we see a lot of African countries also approaching, or having this love-hate relationship with the multilateral lenders is that in times when we've had commodity super cycles, we haven't really used those resources as efficiently enough, and we even haven't invested into the core social aspects of the country. So what COVID has done is further expose or deepen some of these existing cracks in the system. And part of the reason in relation to this is to do with a number of the structural rigidities in the budget in a lot of African countries. Let me explain that with the example of Ghana, and I'll tie that into why PFM matters and what we can actually do with PFM to create a bit more fiscal space and funding in a post-COVID outlook. But the example on here just shows you the 2020 budget proposals for Ghana. So on your left-hand side here chart is what the government was proposing to mobilize as resources for 2020. I've converted these to USD, but in total, they're expecting to mobilize a little over $11.5 billion of revenue as against expending of $14.8 billion. And the revenue mobilization is coming in from a number of fronts. But I just want to focus a bit on the expenditure side of the equation, and where we begin to see why some of these cracks or COVID has exposed some of the socioeconomic cracks that we have to deal with. So if you look at like the expenditure pattern of the 14.8 or so billion, just 4.5 billion is being paid, or your top three budget items are to pay for employees, government employees. After that, you pay for or you service the interest payments from the both commercial and non-commercial debt that the country has. And then there's some earmarked funding or grants to some of the government units and parastatals. When you take off these first three line items, you begin to realize that pretty much all of your budget is actually gone. So your revenue mobilization of 11.5 billion would take care of your compensation of employees, interest payments, and grants. And there's nothing left for capital expenditure or goods and services, or some of the other expenditure budget items. And this is actually the case in a number of countries that when you look at in Sub-Saharan Africa, and has been for as long as I can remember. So I've been looking at like some of the structural adjustment programs and the outcomes of that um, in a number of these countries. And if you look at the budget patterns going back, 20 years, you can pretty much predict this, sort of pattern across the board, where after you pay government workers, you service debt, you pay the government entities their grant, you have very little left to actually invest in the core social aspects of the people or the economy. And you can see it in another way, or illustrate it in another way with this fishbone that I have put on here. So this is from an exercise that we did about a year and a half ago for DFID project in response to the Ghana Beyond Aid initiative, where the government in Ghana is thinking about self-financing its development. Little did we know that actually COVID would even precipitate or make that even more imperative. So let me go back to, contextualize what I said in the last slide with this example here. So yes, we've collected revenue or resources. The budgets are constrained in terms of structural rigidities. But even in terms of the spending itself, what we found that in a lot of the cases, so this was right at the top or at the center of government, there's a lot of inefficiency in spending. So that's the first, this bubble here on your left-hand side. And there's very little value for money in especially the social sector. So this is health, education, and social protection. And these are the sectors that typically tend to be heavily impacted when you tend to have, crises such as COVID. And these sectors then, because of the inefficiency of spending and the low value for money, it would constrain any sort of path to self-reliance that the country is seeking to attain. And the root causes of this, without going through all of that, but at the root cause of it, I'll just pick one at the top half of this fishbone, is that there's quite, weak strategic planning. And even when it comes to budget formulation, there are significant issues in there. I'll pick another point. It cuts across the board. This is a Ghana example, but it's very applicable to a number of Sub-Saharan African countries. That the procurement planning often is poor, and we tend to see a lot of sole sourcing contracts, over the years that we were looking at that from. Third thing is things like the integrated financial management system, GIFMIS, etc., had not been fully rolled out to a number of the subnationals and the MDAs. And at the core of this is pretty much your PFM system and how you allocate those resources to attain or to meet the budget objectives and then the outcome. So what COVID has shown and would indicate to us is that we need to be better at our spending. We need to be better at connecting spending, not in terms of just input, but connect that to outcomes. So you would see, I'll show you in a couple of slides, that we keep a lot more money, even in these social sectors. We keep pumping far more money in there, but there's very little being translated in terms of outcomes. You can see that with an example here in the healthcare sector, another fishbone. So the problem we identified was that the government was actually unable to deliver on universal healthcare. Why? Because there's weak procurement management, there's weak financial management, there's inefficient resource mobilization, there's poor coordination and service organization across the MDA. So what you see consistently across the board is, whether you're looking at it at the level of government or you're looking at it at the level of like a ministry or subnational, these problems tend to be replicated across the board. But with COVID, we are looking at a constrained fiscal space. Already we had a constrained fiscal space, as I showed you. And now we're not going to be getting a lot of like the FDI and the revenue inflows, at least in the kind of medium term to about 2022, 2023, thereabout. So the imperative here is that we have to do more with less. And the question then is how, which is what I want to kind of move to in the next couple of slides. So I talked about spending on inputs without a correlation to outcomes. The problem you can see that in this little chart here. So here I just put two charts, one which looks at the health expenditure per capita in Ghana, but I also put Sub-Saharan Africa there, and then correlate that to life expectancy across the board. What you can see is between 2000 to just around like 2013 or 14 thereabouts, in the example of Ghana, to illustrate the point, we had a 552% increase in our health expenditure per capita in nominal terms from $17 to $111. So the state was spending on average $111 per person on every citizen from $17 in about the 10 or 12 year period up to 2013. That has reduced marginally now to around $67 a barrel. But if you actually look at life expectancy, that has moved or increased only about 2 years in the same period. So life expectancy in 2010 was about 61 years. In 2017, where the latest data ends, is just around 63.46 years. And if you go back to 2000, life expectancy was 57 years, which raises kind of an obvious question. If we are spending more and more money with the little that we've got, in these sectors, then how come we're not seeing as much of a bigger impact, in terms of some of these outcome indicators? And I posit that perhaps we framed the approach to the problem a bit wrongly, where we are always focused on input. So, okay, if you've got a problem here, let's build more hospitals, let's build more roads, but they're not integrated in a manner that connects to the broader output of what we actually want for the nation or the state. And this is going to be exactly pertinent, especially in a post-COVID world, where I mentioned a few moments ago that we have to do far, far, far more with the resources that we have. It's encapsulated in this nice statement from the finance minister in Ghana, when he says, or he said back in October of 2017, and I quote, that the government is committed to cracking down on financial malpractices and wasteful public spending. Hence, the priority on achieving the targets set out in the public financial management strategy. So let me just then quickly go into the PFM itself, and spend a bit of minutes here and tie the points down, and I would then stop and we can have a discussion or a conversation around that. So typically, when you hear of PFM, it sounds quite big itself, but it really is not much. Public financial management, more broadly, is just a set of the laws, the regulations, protocols, processes that are used to manage public resources, and that is encapsulated by the budget cycles. So it's very much interdisciplinary. It's a function of accounting, economics, law, IT, or management information system, and it's practically essential for kind of three main reasons. Number one, for creation of or assessing the fiscal space, for sustainability, and for an accountability. And how this is done or executed is through the budget cycle. So what I have here on this chart is just the budget cycle with the various stages, from when policy pronouncements or proposals are made to when it is actually executed in terms of the budget, right the way through to getting the budgets approved, to executing the budget, accounting, and external audit. But I want to delve and look at two or three component parts in this cycle to talk about COVID and the COVID response, and how the PFM system, perhaps can be better strengthened to meet, the current response to the crisis, but also in a post-COVID world, have allowing us to do much more with less resources. So I will skip over the policy and the formulation bit. The slides will be shared a bit later, so you can kind of catch up on that. But I want to focus on the budget execution aspect. So this is quite an important part or aspect of the PFM system. The aim here is, of course, to attain or to achieve the policy goals. And you have a bit of the expenditure side, and then the revenue side, and then what I'll call the liquidity or cash flow management side of things. What we found as part of that exercise a year and a half ago on the Ghana Beyond Aid initiative was that the revenue collection, we actually aren't doing super great on that side, but the expenditure controls also, in some instances they work, in others they don't work as well, and the reasons for that are quite varied, and I will actually come to that. Sorry, I was just checking. I think somebody put a comment in there. So says I don't know, but I cannot hear a word. Sorry. Can you please hear? Can you all hear me?
Yes, I can hear you.
Okay, let me just check one thing. Just a second, please.
I can hear you well. So before Dr. Teo comes, please, if you have questions, please put them in the chat box, please.
Okay.
Yeah, Franklin, I can hear you. I can hear you as well. It's quite clear here.
All right, thank you.
Great. All right, sorry, I had to quickly, pause and check that because I just seen some of the messages. So on the budget execution, there are big question marks in a lot of the countries on both revenue collection and on the expenditure side of the equation. I'll go into a few of the details to illustrate some of the point. But let me use an example here with the financing of healthcare or health systems financing to perhaps, illustrate a point on how I think an alignment between the PFM system, which is the means that we actually, execute these or finance these budgets, can be better aligned to meet the health financing goals to improve on outcomes. And by outcomes, I mean on value for money and efficiency, both allocative efficiency and operational efficiency, to talk about it in technical terms. So typically, as you see on the right hand side here, this is the cycle broken into about 3 components instead of 6 that I showed you, from the budget to execution to monitoring. And what most robust PFM systems are able to do is to create a bit of a room or segue that allows countries to make contingency appropriations. So, for example, you could have a natural disaster, or as we've had COVID, which has come with serious impacts on both the health front, but also on the economy overall. And these emergency appropriations then need to be clearly targeted. So, for example, if it is healthcare spending, then we need to not only find offsetting savings, so we don't need to just redirect money from one sector to the other, but most importantly, we should ask ourselves, how is this more geared towards improving outcomes, and how is this more geared towards enhancing efficiency? So it's not a question of just pouring money for its own sake, or going to procure PPEs for frontline workers or students per se, but does that, or how is it connected to the wider developmental objective in the healthcare sector? So typically, you tend to see that the Ministry of Finance guys, in my experience, would tend to identify sort of the emergency spending and then the emergency response mechanisms that are at their disposal. In Ghana's case, we saw earlier the finance minister going to parliament to make proposals to take some monies from the consolidated fund and then other funding sources to meet or to mitigate the impact of the pandemic. So ideally, an alignment between the public financial management system and your health financing system can actually help you in terms of getting a single integrated cycle where both say the line ministry and the guys sitting at the level of the MOF, have a singular purpose of view in mind. But there are challenges, and the challenges often have to do with, how do you raise revenue? How do you pool resources? And how do you kind of make collective purchases to increase on your economies of scale and economies of scope. There's a little challenge here. In a number of the countries, what you tend to find is that sometimes the budget itself and the PFM system itself is a bit rigid. So you have to earmark funds to sub-national entities. So to say, for example, your GET fund or the insurance authority, things like that. And that means then that you having to divert resources from those agencies is going against the letter and the spirit of the Public Financial Management Act or the wider system. So it's a bit of a challenge and then a balancing cycle here. But the point I really want to make is that both the line ministries and the agencies need to be thinking across the board in terms of the response that are being given and how this response ultimately are connected to improving outcomes. I've just provided a link here. That was just a health example, but there are several more examples that one could look at. And for those interested on this subject, if you go on the IMF website, they've gladly actually collated a number of special notes that deals with things like digitalization, how to run state-owned enterprises, around fiscal rules, around budget controls, in public investment management, and then treasury management, all under that. Time wouldn't permit me to go into some of these granular details, but there are far more resources available for those interested to go through or to look at some of these. Let me quickly run and skip through a bit, on the audit bit. So I've dealt with the execution bit. I want to touch briefly on the auditing and what can be done. I think in the post-COVID world, transparency, fiscal transparency, and fiscal accountability is actually going to become far, far, far more important. As I mentioned, that we have to make do with significantly less resources than one would anticipate. So there have actually even been calls already by a number of these public advocacy groups, such as Transparency, to tie COVID-19 debt relief or aid relief to transparency initiatives. And there's a nice statement from the chair of the International Public Sector Accounting Standards Board, which is the global body that deals with PFM, public sector accounting, that we need to have much more robust, strong systems, and you need to have a lot more transparency across the board. And one way that can be attained is through fiscal institutions. I will give you two examples. The first example being fiscal councils, and then I'll talk about the audit bodies like Auditor General, etc. So you can see on this chart here that post the 2008-9 financial crisis, a number of countries have actually moved to put in place or institute fiscal councils to serve as a check on government spending, but also to ensure that there's broad alignment between the policy objectives outlined in the budgets and say party manifestos to what resources are actually available to execute these objectives. So a number of countries have moved to implement these such councils. Ghana most recently, in the latter part of 2018, passed such a law to set up a fiscal and a financial stability council in line with the trend that we had already seen happening in other jurisdictions. Two footnote points on that is that the effectiveness of such councils really hinges on whether or not they have autonomy to make decisions, and whether or not the composition of people who are appointed to such boards or councils, are devolved from the political or executive interference. If you look at the literature on this, it's quite clear that if you don't have these two key cardinal points in place, you can have these councils for all you want, but they don't still serve as a check on excessive government spending. And then on the auditing aspect, another interesting one is, I think, the role of the audit or external audit bodies like the Auditor General in Ghana's case. You can actually see that because of the rollout of GIFMIS and then other PFM systems, the office of the Auditor General and similar bodies have actually become much more proactive, and they become much more proactive in terms of using the PFM law and using other existing law to announce things like surcharges, and to delete people on the payroll systems. Again, the point here being that if we have to make do with less resources in a post-COVID world, the role that such institutions play is absolutely vital and quite important, and they must be given all the independence. They must be given all the autonomy to actually carry and execute this mandate. Two slide points. I think my time is running, so I'll take another 3 or 4 minutes, and I'll round up if you don't mind, because there's quite a number of things to go through. Let me go back to the tax issue or the revenue issue and creating more fiscal space post-COVID. I think a number of the countries on the continent have an opportunity through things like the digitalization of both government services and frontline services, but across the wider economy, to rope in the informal sector to increase the tax net. So with the exception of South Africa, I think Morocco and a few other ones that have tax to GDP ratio of a little over 20%, several of the Sub-Saharan African countries are averaging 13, 14% tax to GDP ratio. In Ghana's case, after the last rebasing of the economy, now it's just sitting a little over 12% tax to GDP. But let me show you what that really means practically in terms of the revenue opportunity that this crisis offers us. We could actually go up to 20% tax, to revenue GDP. What that means in practical terms is that there's a room to actually raise as much as 8% of GDP, or $5.2 billion, or in Ghana cedi, about 25 billion Ghana cedi, from things like the digitalization, but enhancing the tax revenue collection effort. I think I saw one estimate from the last Article 4 report on Ghana that said that the recent revenue mobilization initiatives will only meet about 1.5% of this. So there's still about a 6%, gap that needs to be filled. And what COVID has shown us is that we need to double up more or less our efforts on this front. Two quick points on the financing of the budget from the monetary aspect. So far I've dealt with a lot of fiscal policy issues and the connection to the PFM. Just a little on the monetary and the macro financial side of things, that we are likely to see far, greater involvement of central banks in Sub-Saharan Africa, as we saw, with the 08-09 financial crisis, using the tools available to them to also support, the COVID and post-COVID response. And this can actually, on the expenditure side, on the fiscal side, we've talked about reduction in expenditures, creating more revenues, but it also could be through borrowing from domestic and external resources. And in a number of the countries that have central bank financing or act, the process for borrowing or which instruments the central bank can undertake this mandate is clearly outlined. So in Ghana's case, it's a combination of overdraft facilities, but also open market operations. So the central bank selling or buying government T-bills and other securities. The last point, going back to the fiscal issue, and this is coming back to Ghana, and the point that I reached or attached earlier on about having to make do with far less resources in such times and beyond. I draw an interesting analogy between Ghana and Chile on the charts that you see on here. What we are measuring here is basically the rate of change in expenditure growth. So that's the deep gray line here. And then the rate of change in like the revenue growth over time. And this goes back to 2001. What you can see in the case of Ghana, which is on your right-hand side here, is that a lot of the fiscal policy making in Ghana, and certainly in a number of countries in Africa, is highly pro-cyclical. So what that means is that we tend to actually overspend during the boom times instead of saving. And then when disaster strikes, or you have an external shock to the economy, we struggle to meet that. So you can see, for Chile, right, which is a comparator country to Ghana. So Chile also has quite a big natural resource sector as well. You can see that despite the revenue growth, right, declining during like the last financial crisis, 08-09, the country was actually able to maintain a consistent expenditure growth pattern. Running a counter-cyclical fiscal policy tied to the overall objectives of the government, because of course they had something like the Sovereign Wealth Fund and other things in place to draw upon. But in the case of Ghana, you can see, in 2008, big swing. In 2001 to 2002, revenue goes down, expenditure goes down. 2008, 2009, expenditure revenue, starts going slightly up, but expenditure growth comes down. And then most recently, during the last, crisis that we had with Doomso and the commodities price cycle, you tend to see quite a number of this. So you ask yourself then, despite having introduced or to what extent would the new fiscal responsibility law that has been passed and the fiscal council help in mitigating some of these pro-cyclicalities that we see in Ghana and in a lot of the sub-Saharan African countries. In 2020, I certainly think that the act would not help us to prevent any overspending. According to my sort of estimate or forecast, we are probably looking at a deficit of between 8 and 10% of GDP by the end of the year, compared to 4.7% that was originally estimated in the 2020 budget. So what are my concluding thoughts or broad points in here that I want to leave us with? I think, number one, there are significant uncertainties about the nature of the post-COVID recovery, and this has an impact on Sub-Saharan African economies. My money is, on kind of a U-shaped recovery, pending or subject to a vaccine being found for this virus. What COVID has exposed to us is that there are fundamental structural weaknesses in a lot of the Sub-Saharan African economies, and that's because we failed to diversify. We've had a commodities boom, and we didn't use those resources as well enough as we could. In a number of the countries, certainly in Ghana, fiscal policy making is highly and notably pro-cyclical, and that's related to both commodities and then the electoral or elections cycle. And in such an instant, your Responsibility Act or the financial laws may not be able to prevent on overspending. Post-COVID, I think the budgets or the conversation in Africa needs to move away from this inputs, let's get more money and put it into healthcare, buy more boats, buy more cars, etc. More now to actually a conversation around outcomes and outputs. And this actually should be based on my experience on a coherent kind of theory of change. So how are those costs, how are those expenditures going to actually help at the end of the day to improve, say, healthcare or education or social, outcomes across the board? And how do we actually measure these outcomes on a, on a year by year or whatever time basis that we choose? And that would then help us to both tackle poverty, inequality, there's opportunities to pursue digitalization, and even like the green growth, agenda now in a number of countries. For the public procurement systems itself, it goes without saying, and this has been made extensively, there's a need to strengthen these systems backed by effective internal and external audit with a strong sanctions regime in place. Other than that, we'll be pouring more resources into a leaking basket. And it is in this vein that I think that the work that institutions like the Auditor General in a lot of these countries perform is absolutely vital, and we must do all we can to safeguard the work of such institutions, especially around making sure that both the allocative and operational efficiency on things like value for money are met to ensure budget credibility. For civil society, I think we also have a role to play. So in relation to the calls for more transparency and more anti-corruption measures on COVID relief funding, I think civil society has a voice here to bring some of these issues to the fore and ask the fundamental questions around how have the monies been disbursed, in what areas have they been used, and how are they connected to such outcomes. So it's a bit more of a proactiveness that we need here. And central banks would also play a bit of a role on the deficit financing. And just to my final point there being that Africa has a tremendous opportunity to borrow the quote leapfrogging word, through things like enhanced digitalization on the governance and government side of things, but also on the private sector side of things to rope in more people into the tax net. So with that, I thank you. I know I've run a little bit over the time, but I just thought perhaps I take a bit of time to explain some of these concepts to us. So more than happy to take questions, and I hope it's been useful.
Well, fascinating stuff. Thank you very much, Dr. Theo. I think we have about 20-25 minutes. We can do that for Q&A. The two things that jumped at me listening to you And as always, it's been the issues around prudence and sound public policy making. I think you even touched on the issues of pragmatism in these very COVID times as well. Let me put you on the spot first, by the way. You know, our finance minister, when he wrote in the Financial Times of London, suggested that he was green-eyed and with envy because countries that were a bit poorer than us were getting all the major reliefs, and that he thought that Ghana should get the same as well. But then I wondered, because I thought that we had a bit of meat on the bone, but we were not particularly, being very prudent. Question I have for you: just as we're asking for debt standstill, what are some of the expenditure items would you think could also be stayed or has been occasioned as a result of COVID that we could, reassign in your own words? Well, of course, the point is to be able to stand still them, and then those expenditures can be used profitably. The second question I have for you is that as a trade and investment advocate for countries like Ghana and Sub-Saharan Africa, do you see the sense that Ghana has enough clout again after COVID to be able to attract FDI? I think you should think about these two. So maybe you want to answer that before I bring some of the questions that have been asked in the chat room.
Yeah, thank you very much. On the first bit, I think, yes, there's clearly a scope to rationalize expenditure. So interestingly, if you look at, for example, Ghana's 2020 budget, and you go to the very last pages of the budget in the appendix, it gives you what they call the summary of government operations, and it gives you line by line what the appropriations or amount to specific sectors and line ministries are. I think the government actually showed a bit of initiative by reducing the budget on goods and services. I don't have the exact amount off the top of my head, but when I actually looked at that in relation to the budget amount, I felt that perhaps there was a bit of room to further, reduce or cut back on some of those spendings, especially also when you look at like the General Office of Government Machinery and the amount of monies that are spent. I am yet to see any report specifically that looks at the efficiency of spending, within these, government machinery. So I'm not talking about frontline ministries. I'm talking about, going to the level of like the presidency and some of the other agencies that fall underneath that. I think perhaps there's opportunity to do a bit more on that. But there are trade-offs. The trade-offs especially is, from a political economy angle is, well, you have an election around the corner, and typically, as I showed you, most governments tend to overspend in elections. So it's a difficult balancing act, but there are certain line items in the budget that can be further rationalized. Another example is some of the state-owned enterprises or companies. There has been an attempt to reform like the governance process at these SOEs, and that was even sort of prior to COVID. But again, I think the amounts of monies that are allocated to some of these SOEs, we actually need to ask fundamental questions about how they are utilizing and using these monies. I've been involved in a bit of work on one of them, which is the National Oil Company for Ghana, and the results are kind of interesting without going into a bit more detail. But there are opportunity again in here around with the SOEs and contingent liabilities and what that means for the budget overall. Your second question on trade and investment and the clout or the ability of Ghana to attract FDI, I think that is sort of beyond doubt. So you can see pre-COVID, the FDI inflows actually in nominal terms were increasing, and the numbers had actually kind of like gone up year on year. And partly that reflects a lot of the moves that have been taken by several of the government in the last several years to go on a massive investment drive to attract FDI. In the sub-region, we are competing for capital with our regional peers, so Cote d'Ivoire next door, Nigeria, etc. I think what we can do realistically, and what COVID also offers, is for us to improve our ease of doing business. So the regulatory or bureaucratic red tape that often accompany some of these things tend to also add or increase the cost of or the discount factor that you apply to some of these investments. So the digitalization initiatives at the ports, etc., they are useful and go some way to help, but far more can be done to generate a lot more internal resources without, of course, supplemented by improved FDI flows.
Well, I mean, let me be daring once again. I think in your earlier paper you wrote, you co-authored with Patrick, you posed a question, which I thought was very important, that if we were going to spend an estimated almost 9.5 billion, actually 10 billion cedis in bringing back the financial institutions that were moribund, then it meant that if the government was positing that they were going to spend close to 9.5 billion or a little bit more, about 10 to 11 billion cedis in the corona alleviation program, it means that we can actually be prudent, and that we can look at all these interventions we've made and not decide to shortchange our own gains that we've made. You did suggest at that time that there were certain fiscal and monetary measures that were being adopted that you thought could be stayed. I'm putting you on the spot again. This is related to the oil sector. What were you saying at the time that we shouldn't do? Because
thank you. It was just two things. I said that we shouldn't rush to go and amend the PRMA to want to go and tap into the heritage fund, for COVID relief, because if you look at the schematic, for every 100 cedi that comes in as revenue, about 70 cedis goes to the budget directly, and then 21 cedis goes to the stabilization fund, whose purpose is precisely meant to deal with issues as we've seen with COVID and the oil price downfall. So collectively, both the budget and the stabilization fund is 91 cedis out of 100 cedi of revenue you're getting. And if you've not been able to use the 91 all too well, as the evidence shows in the various PIAC reports, etc., then of what use would 9 cedis do for you? That's like a drop in the ocean, okay, especially given that 9 cedi is meant for intergenerational equity in the heritage fund. So that was one. Number two, I also suggested that I'm not in favor personally of going to amend the Bank of Ghana Act to remove the net zero domestic financing requirement, because that's like kicking a can or opening a can of worms. And we've been down this road before in the last kind of 10 years, where at one point it was like 10% deficit financing. And if you look at the data, consistently we were doing sometimes 12, 15% deficit financing. In the last IMF program that we exited, that came down to 5%, and then gradually it was sort of dealt away with. And I raised or suggested that if we're to go this route, we are opening a big Pandora's box with an election around the corner, where again the evidence shows that we tend to overspend, during such cycles. We're better off not touching these two laws, and let's find ways and means to actually do with the resources that we actually have in country.
Right. So, well, I have two questions from two great journalist friends of mine. They are financial journalists, George Wiafi of Joy FM Multimedia. He wants to find out what should be the fiscal approach for the next half of the year, taking into consideration how COVID-19 is impacting the economy, Then he asks a follow-up question. Do I get from you that the Fiscal Council has failed or cannot do anything? Check our budget overruns? And I'll make a statement after that when you've answered this question.
Sure. Let me tackle the last one first. I did not say that Ghana's Fiscal Council specifically has failed. I mean, it's only been in operation for less than a year. So it will be a bit of an unfair assessment to do or to make. Rather, what I said is that the evidence shows that if these councils are to be effective, then you need to make sure that the people you appoint to those boards are independent. And number two, the council or the body itself is independent of executive authority, right? So if you look at how like the Office for Budget Responsibility works in the UK or in the US, the Congressional, I think, Budget Office, and a few of such examples dotted, you tend to see that when they speak or come out with a certain forecast, both sides of the political divide, listens to them because they've actually built up that credibility and they've actually built up, a bit of social capital. But if you don't have these two at the core, then, we would have this council in place. However, it wouldn't, serve us in the long term. And also a little footnote to that is that with COVID, we were, because of the revenue shortfall anyway, we're having to overspend the budget ceiling, the 5% budget ceiling stipulated in the PFM Act. The question was how far or can we actually go? When we run some of the numbers and we said, if you did a bit more savings on your goods and services budget, better financing or better reform of the SOEs, you could actually run a deficit of around 6% of GDP rather than now the 8 to 10% that we're looking at. I don't know to what extent the fiscal council that we just set up influence those decisions, because I just don't know. But more broadly, the evidence just shows that if you have the council to, or you need a council to work, then they need to be independent, and the institution itself needs to be independent of the executive interference.
Okay.
I think the first question was on
I think you answered that much.
Financing of the budget. Yeah, the little point there is that we should just be more prudent. That's all that I would say. And right. I realize it's difficult because, election. I was talking to a friend of mine who works in government in one of the African countries who said, look, my brother, right now we're thinking about survival and how to win the next election. We'll think about deficit and prudence after we win the election. And I thought that was poignant.
It is indeed. Let me, before I go to Richard Abbey, another great financial journalist friend of mine, I'd like to call on the IMF country director, Dr. Albert Tumamana, who just visited a while ago. I think he has some insights or questions. Sure.
Thank you, Franklin, for having me. It's always a great pleasure to join this forum. So when I saw that this was planned, I tried to make time to join. This was a great presentation. I'm also quite encouraged to see that the material that we put out there is actually useful for this kind of purpose. I had a few comments, not necessarily questions, about the presentation. I think that it's very educative, and there are a lot of information that you actually put out there. Let me first start by, the picture that you paint of emergency financing delivered to African countries or to countries in general. I think the first thing is it's important to understand that the COVID, which is a COVID-related crisis, which is an unprecedented crisis, is the perfect storm for Africa, irrespective of what the starting point was. You have several channels through which most countries, whether they had enough buffers or not, will have been affected. And I think you touch on several of these points. When you take the collapse in global demand, when you take the collapse in tourism, capital outflows, the restrictive measures that have been put in place to deal with the health crisis itself, from lockdowns to other measures. These are a set and of course, commodity prices. I guess what I'm trying to say is that there is very little space for countries on the continent not to be affected. And something that I think the presentation did not mention is that we were already warning countries, in the last few years of increasing debt and very little fiscal space. And this actually goes beyond Ghana. So this is the perfect terrain. And, so it's not a surprise to some extent that most of the countries on this chart are actually requesting for emergency financing. Let me also point out to the fact that more than 100 countries have requested, right? So this is still incomplete because some countries are still working on it. South Africa, for example, that is not on this chart, is currently discussing with the IMF for emergency financing. So this chart will look quite differently, will be quite different in a few weeks from now. So what we've seen is countries that are, if you know a bit the history of South Africa, it will take a major shock for South Africa to come to the fund, right? So they are coming to the fund, and this is in progress. Nigeria hasn't had many emergency financing. They also came to request. So I want to dispel the impression that, this is just emergency financing for the weakest countries. Of course, South Africa had its own challenges, but this is an unprecedented shock. The second point, and I think that you save it towards the end, I think there was a lot of focus on expenditure rationalization. Of course, it's a very important point. We tend to give more prominence to fiscal consolidation through better domestic revenue mobilization. I think you spent some time on that towards the end of the presentation, so I won't say more, but I think that it's underrated. But I think in the case of Ghana, we can clearly see that, the upside of broadening the tax base, and I think that this crisis is making the point that there is a relevance to give, to be tax compliant for cases where, like that, where the government is basically playing the role of coming to the rescue. Of course, the money needs to be spent well, but I think the argument for reinforcing tax compliance is made exactly in this type of situation where there is no insurance policy that can deal with the magnitude of this shock except through central government. Finally, on how to address, what's the best way to have oversight over emergency financing. I think that, we first, what we say as an institution is that, we've put some money to help finance the additional or the incremental health demands or health expenditure. But what we like to see, or what we are asking countries is to keep the receipt. That's the way we are putting that, because we may want to see it. And, I can share more material on what we've been doing in that aspect. In the case of Ghana, our thinking was always that the framework to monitor spending was strong, from not only the parliament oversight, but also from the audit service in general. So this framework was already in place. And this framework should be used to the full extent to provide transparency, to of course audit spending, especially emergency spending that came because of the COVID. And basically, there is really no need, in my view, right, in this circumstance, to create another body, which is a fiscal council, right? I think you already have an emergency, especially in a context like Ghana. There is, you know, the framework that is there is strong enough. Of course, there is a fiscal council in Ghana. It's an additional layer that can also help, but the existing regulation, the existing institution should actually play their role. So what we recommend in this case is as much as possible to implement and publicize both internal and external audits. And that's what we've been pushing around the continent and beyond for countries that have been accessing our emergency financing. So I'll stop here. Thanks again for the presentation, and you know, looking forward for further discussion. Over.
Thank you very much, Albert. And I'd like to just say that thank you for your wonderful support over the course of your time here. I recall in February you had wanted myself to join some other African ministers to discuss good governance and the fight against corruption in Africa, as if you were clairvoyant. And so you saw some of these challenges that Dr. Tia Champon has mentioned. Thank you very much for your friendship again. I'm sure Theo would want to say something about that. But before then, I'd just like to say that Richard Abbey, who I mentioned a while back, wanted to ask a direct question. He says he wants to clarify, he wants some clarity. Are you, Theo, saying that the deficit target would still have been missed even without the attendant impact of COVID? I don't think I heard that, but I'm sure Theo would want to say something about that. Before Theo comes in again, Julius Sou, our own uncle, Julius Sou, asked a very interesting question. Can audits be done in real time, given all the challenges we have? I suspect that question could be answered by our own good friend Domelevo, who is listening in, as well as Beauty Nathe, who is the Executive Director of GACC, even our own Ben Bachi, who is the Executive Director of ASEP, who are all on call. Guys, if you want to make an intervention, please raise your hands and I'll let you do that. Otherwise, there are a few other questions here. So please note them. Someone just asked, I think Joyce Daniel, she says, I feel COVID-19 has a good side. We are out now trying to be innovative. Our thinking faculties are now in full gear. I'm highly impressed with how some private schools have embraced the virtual learning. But how about our public schools? Learning seems to have ended as some areas cannot follow the TV sessions introduced. Not all have televisions, and if they do, what about the electricity bills? They will no longer have free ECG running their meters, because that's more of a comment. Richard Abbey again says, and given that revenue from oil has been hit severely, how do you see us navigating some of the rigidities in our budget, such as spending on flagship programs like the free SHS? Do you think it is the right time to reassess how that policy is implemented that has allowed those who can afford to pay their bits? Theo, you see, you dodged the question the last time. When I asked you, you managed to dodge it. I'm grateful for Richard, and I'll end it here now. Now you are put on the spot. You can be diplomatic all you want, but I'm sure Richard wants you to ask a very important question.
I know, and that would make for an interesting news headline, I suppose.
Oh, you're not the first. I think the finance minister himself suggested a while ago that he thinks, so, but more, not just on free SHS. Essentially, he's suggesting to you or asking if there are any programs that could be reviewed. I recall Patrick had written a paper. I'd asked him to write a paper, Patrick Stevenson, by the way. I'd asked him to write a paper on the essence of the government's job creation program. What is it called again? NAPCO?
NAPCO.
And his evaluation at the end of the day showed that if it is not going to return value, then we need to reassess it as well. You may want to posit your answers within that light.
Yeah, sure. I can make a few quick comments, and then the others can also chip in. So on the first one of would the deficit target had been missed even without COVID, I think that was always a possibility. I think the last time we ran, or I ran the numbers on the economy, we were looking at just a little over 5% of GDP deficit. So it would have been marginally within the bounds set by the PFM Act. And so that kind of was the situation we were looking at pre-COVID, 5 to 5.5% deficit. But of course, what COVID then has done with the loss of the revenue is created a much bigger funding gap. And so we've now had to resort to a few other sources to plug that gap. But like I said earlier, I think that even with the gap that existed, we could still have pursued a few of these rationalization initiatives, which ties into the second question on NABCO, free SHS, 1D, 1F, all of that, to more or less reduce, how big that would be. And the initial estimate of the numbers I ran was that some of these savings could actually then mean that you probably would run a little under, 6.5% of deficit. So that's 1.5% less than the original 5% target, as compared to now, which we're expecting about 8 to 10% deficit spending. What is interesting to notice that I think in the law, there's a bit of room to trigger these emergency provisions, but there was there's no additional detail on how you actually go about doing it and how far you can actually go to spend your way out of the crisis. So certainly, I think that they would have maintained those deficit numbers just around the target in the PFM Act, but with COVID is going to be far bigger as anticipated. The question of spending in other areas, I also think that a program like NABCO can and should be reviewed, because I think it's been implemented a number of months now, especially in a situation where you're facing significant budgetary gaps. So instead of maybe rolling it out across the number of persons that had been anticipated by the end of the year, it could actually be staged, and in a staged manner then assess what is the impact of the skills training and other things that the young students have gotten on, like enhancing their livelihood enhancement opportunities. What I've seen historically happen in Ghana, and this is not any criticism of NABCO, we tend to run these programs without any proper M&E mechanism, monitoring and evaluation, tracking mechanisms attached to it. And so throw, like I said, more money down the drain, but very little in terms of outcomes. Free SHS is a bit tricky, I must say, because look, at the end of the day, the political reality is that it's one of the government's flagship initiatives, and probably the election may even be campaigned around things like that. So I struggle to see how they would scale back on that funding aspect.
To be fair to you, when I put you on the spot of free SHS, what we did say in that paper you published earlier was that if school was going to be postponed at the time, then it meant that some of the savings in terms of feeding the students could have been used in other areas. So that's fair. Let me say that Kosifiagbe, and we have just about 8 minutes to go. Kosifiagbe asked a question earlier about the rigidities that are inherent in the economy as a result of COVID, whether the PFM provision that our annual deficit should not exceed 5% should not be. I think you've answered the question already. So Francis Baidu actually also has a question. You made mention that many liquidity stimuli have been initiated, especially in Ghana, basically through commercial banks, but unfortunately without specific stringent lending directives. Data shows that a chunk of the credit funding in Ghana goes to real estate and importation. Do you think the intent of this liquidity stimuli would be achieved, especially in Ghana, given the current practice of commercial banks? So please note that question. I think that someone says, Kwame Esiedu actually says, do I think the politics is the main reason why we do not convert our inputs into tangible outcomes? Outcomes are soft measures that do not win votes immediately. Inputs and outputs do. Unless society does more to track the outcomes, then citizens won't care. I've done some work on many other health outcomes and the picture is bleak. Kwame will be grateful to, oh, this Kwame Esiedu, our own Kwame. Yes, beautiful. Yes, we should. And I think we've been doing that as well with manifesto tracking. I must admit that the coming elections would also mean opportunities to put questions directly to these politicians as to what they will do when they have the presence of mind to be prudent. So I'll let you answer those questions. Did I see some hands actually?
Yeah, I think maybe we let the other people you mentioned, they have some comments to make.
Yes, I mentioned quite a number of persons,
yes.
Kwame, including yourself. Ni and Erebiakwa, I'll come to you briefly, but Ben Bachi is on, Beat Natre is on. I don't know if Dominico wants to make any comment. But,
hello, Franklin.
Yes, please.
Yeah, this is Kwame.
Yeah, please.
Yes. Thanks, Theo. This has been very, very educative. And I must own up, when I was doing that piece of work on the health outcome indicators, Theo was one of my points of call in February. So he's aware of what I'm talking about.
Kwame, not many people know you. I know you are a doctor, you are a pharmacist, you are a policy guru, but you're also a senior fellow, as you are a fellow of the CDD. That's what we know about you. And we know you are a prolific activist when it comes to, in fact, you are the only last man standing monitoring the COVID numbers. Some of us have given up, but we are grateful.
Yeah, thanks, Franklin. Yes, like I was saying, in the civil society space, there's a lot of collaboration. Like I said earlier, when I was working on the numbers when it comes to our outcomes, Theo was very helpful back in January, February. And at that time, little did we know that COVID was going to be this devastating. But the bigger point I was trying to make is the fact that in any society, anything that is not measured is never achieved. So as long as we allow the politicians to say, oh, I built a hospital, can't you see it there? I built a road, can't you see it there? Without saying, okay, you built a road, how many deaths did it prevent? How many accidents did it prevent? You built a hospital, how much did it cut maternal mortality? You increased health expenditure per capita. To, like Theo said, in 2013, the NDC increased it to $111, which is the highest Ghana has achieved since independence. What was maternal mortality? What was under 5 mortality? What was, our immunization percentage? And we look at it and say, at the end of the day, how did it impact on our quality adjusted life years and improve our life expectancy? If we don't ask those questions and we continue to make the politicians say, I built a hospital, I built a road, we're not going to get anywhere. We are just going to throw money away. But more importantly, what benefits us as voters is the outcome. And sadly, we have shared that responsibility to track it. And that was all I wanted to say.
Well, beautiful. I think Patrick makes a comment to that. Is akin to it, really. He says these social intervention programs are not considered within the broad architecture of labor market inefficiencies and private sector lending. Private sector leading the drive for the development of the. To this end, they will continue to be a strain on the economy. Ninyi Ayerbiakwa actually says government is considering revamping local manufacturing. How should they approach this, especially in light of the high cost of power and huge debts in the energy sector? In fact, Ninyi makes a complimentary comment. Uncomplimentary comment about the dual role of minister, MPs in parliament. I suspect that comment was made on the back of the ability to, monitor government expenditure, right? Beauty said he had to go for another meeting. I think I know about that meeting. But anyway, there are quite a number of comments. Looking at the risk associated with COVID-19 expenditure, loans and revenue shortfalls in election year spending, are the right decisions being made by government of Ghana? This is Isaac Bonny who asked that question. Then there was, okay, Osai Amankwa, for clarity, are you saying the Fiscal Council, which is to ensure fiscal and debt sustainability, will do little in these times of COVID, considering the makeup? I'm not too sure you said that. I think Albert, the IMF, the country director, made mention of something to that extent as well. But anyway, do you have comments to make? Someone, before you come in, someone says, hi to you, insightful presentation, Dennis JJ, right away. On central bank financing, how is that going to impact macro stability, given that such financing will likely increase money supply within the economy? Okay, so please marry all of these responses to your concluding thoughts, and then I'll thank everybody as well.
Sure. So yeah, I mean, on the last one on central bank financing, yes, it would increase money supply, but I think the broader policy objective, if you look at it in a classical sort of Keynesian approach, would be to stimulate aggregate demand and to get more or less rejig the economy going. And remember, it's only supporting what the Ministry of Finance is also doing on the fiscal front. And both of these need to go hand in hand for that to be effective. What is quite interesting when you look at Ghana's data over the years is that at least in the last couple of years, probably starting about 2016 onwards, we've seen much more better coordination in terms of the monetary and and the fiscal policy, and that outcome is partly reflected in the inflation targeting framework that we have in place. So at the end of the or during the budget, they will give you want to maintain inflation 8 plus or minus a certain percentage point, and you can see broadly that has sort of been the approach that they have been working within. But there are bigger issues that we have to deal with. So away from all the technical jargon and aggregate demand, aggregate supply, and money supply, the real issues of how do you actually create jobs in the system without some of these what I call in quotes, tokenist measures like NAPCO, etc. There are fundamental problems that need to be addressed on youth employment, which is the biggest issue in my estimation that we face as a country. And there are issues on the fiscal side about we need to spend our monies much more wisely. And as Kwame said, they have to be outcomes driven rather than inputs driven. To Nenye's point about the energy sector, that's another perhaps webinar on its own. There's a lot that we can actually say about the persistent indebtedness in the sector, despite recent moves like the energy recovery program and the cash waterfall mechanism that has been introduced. There are still structural issues in the sector that is making the cost of power far more expensive than would be the case, to drive our industrialization drive. But I'll leave the comments on the energy sector more broad for now, and maybe another time we can come and do a much more detailed deep dive on the issues in the sector. Perhaps maybe if Ben is still on, he may comment on the energy sector as well.
Well, Ben, I'll call on him. Ben is very conservative. If you don't call him, he doesn't want to talk. But I'll put him on the spot.
That's our Ben.
Before I put him on the spot, I'd like to say that you said something a while ago about budget overruns. Okay, let's let Ben come in, and then Ben, do you want to say something?
Yes, thanks, Franklin. Sorry, I didn't join early, so I was struggling to fit in, so I don't repeat what has been said already. I think a couple of issues. When it comes to the running of a country's budget and its expenditures, you can't always assume that things will go as you plan. And that is why issues of contingency is quite relevant. We have an arrangement within the Constitution for us to have an emergency package, which allows us to respond quickly to emergencies. You may not be able to adequately plan for a situation like COVID, which is much more demanding. So you can have a buffer like $1 billion sitting there. But what should kick you immediately into motion in addressing the challenges before you look for additional support? As a country, you must have it. And we were exposed badly to realize that in the face of COVID, we had zero balance in our contingency fund, and therefore we had to quickly now move money from the oil funds to be able to provide. And that also took time because you needed approval from Parliament, to be able to do that. But if we had the contingency fund, you'd have only needed the Finance Committee of Parliament to approve that and get things done quickly. You cannot rely on external support to address contingency from the start, and we have to pay attention to that. The energy sector challenges, for me, sometimes we talk about some few millions missing here and there, but when you sit and you look at the leakage and the wastage, it's so alarming. You're looking at projects like Eastern Corridor Road, and we fancifully talk about it year after year. And at one point, we were sinking as much as $100 million, a month, for the energy sector inefficiencies and payments, unwarranted payments at that. We can be more efficient at tightening some of those loose ends, ensuring that the contracts are right. Where we need to cut the waste and bear the brunt, we do so and do that quickly. And all of that has had implication for our inability to respond adequately because the liabilities are still there. And you recall that the finance minister wrote a piece, in the Financial Times complaining about a company, actioning its letters of credit and guarantees with the World Bank when we're in the COVID situation. But the gas has to be produced ultimately. If somebody produces gas, the gas is sold to the power sector and the money doesn't come back. Do you blame the producer of the gas or your inability to fix the power sector problem, fix the distribution end? Because you and I, we pay our bills. So who is not collecting the revenue or who is mismanaging the revenue for which reason we are not able to pay for the gas? That is a critical concern that we have to address. If we do not address some of those wastage, recovery will take a long while because we are still paying for capacity charges, we're still paying for non-collection. Because if you're not able to collect the revenue, government is the ultimate guarantor of all these power plants and the energy sector. So government has to pay. So what's supposed to go to build the schools, support industry and support small businesses? You end up doling out those monies to pay for power that has been consumed by some people or by failure of the agencies of state to actually perform their function to be able to save us all of that. So like you said, it's a bigger conversation to be had, but we have to be more prudent and ensure that some of those wastage in the energy sector can be curtailed.
Well, that's Ben Boachi. He's the executive director of ASEP, the Legion Energy think tank on the continent. Let me just say that all of you have said quite a lot, and I suspect that in these times, prudence is the watchword. And indeed, you can have all the value for money permutations, modeling, and what have you, but if we do not replace nepotism, corruption, and collusion with meritocracy, pragmatism, and honesty in public office, then you'd have challenges without a doubt. And on that, Theo suggested that somebody needs to do some work on the Office of Government Machinery, where I believe that's where all the corruption sits. No qualms about that. If you look at the Office of Government Machinery, not just with this government, but successive government, that's where all the budget overruns sit. And in 2017, Imani did a and analysis of budget overruns for the Office of Government Machinery. What this government has cleverly done is that because they know that previous overruns were used politically against the previous administration, they actually now accommodated the overruns. So you see 1.5 billion in 2017 to 3 billion in 2018. And this year alone, I think the chairman of the finance committee suggested that the Office of Government Machinery has spent 3.5 billion. That is where the dams sit, one village, one dam, which are said to be dug out, actually sit. So that's where the problem sits. But on this conversation, we have great persons like my good friend Prince Moses, who used to be the online editor of the Africa Report, but is also now a very senior person at the Ministry of Finance. He's taking notes, and I'm sure that everything is said will be shared with the ministry. I noticed a few people from the Ministry of Finance as well on the call, and it'll be useful to have them as well. Let me just thank everybody, thank the Theo as always, and thank everybody who contributed, Albert and everyone else who is in the leading role. I thank NAFI and the gang from the Resource Governance Institute, our colleagues from GACC, our friends who joined in as well. Let me just say that there's going to be another webinar after the budget is read, Professor Bokwin, and if you would have make the time, you would probably anchor that particular program for us. But let me just also add finally that Imani is planning a presidential, I don't like to call it a presidential debate. In the light of all that has been discussed right now, today, it looks as if we need to chart a new path for encouraging growth goals that would unlock our potential as a country. She has talked about digitalization. We need to start asking our candidates, if are the new ones, including those who want to be, well, got the independent candidates as well as the minority parties. Because I think they also have very good ideas that they need to bring on board. We are planning something like that, and you get to know within the next week or two. Thank everybody. Thanks particularly goes to Enoch Osei, who has been very instrumental in setting this up technologically. Thanks to the Imani team for helping out in all of this. And I hope you took notes that you would prepare questions to ask our presidential candidate, hopefuls, by the way. Thank you, everyone, again. Thanks for staying on. I'll see you.
So I think just the last one, the slides will be made available on the Imani website.
Yes.
So you can, yes, it will be publicly accessible.
Actually, the slides have been shared by Enoch already.
Oh, okay.
So everybody can take a look at it and download. Thank you very much again. Thanks. Bye-bye.